So today we're going to talk about a stock that exploded last week, why it exploded, and potentially what is the upside left in this stock. And it's a stock that I own as well. So I hope you enjoyed the video, guys. Let's get started. So I think most of you guys, when you clicked on this video, thought the stock was going to be Shopify because it did have a fantastic week last week. But it's not the stock we're going to talk about today. But worth pointing out, really good week from Shopify. In the last 5 days, up 22%. In the last month, up 32%. And year to date, up now 46%. And in the last year, up 58%. Yeah, really good rally from Shopify. Obviously, a position I own. One of my largest positions, actually. I think even my 7th or 8th largest position in the portfolio. So that was a really good run up in Shopify stock last week. I'm not going to talk about that one though. I'm going to talk about that one on the Patreon for you guys later today. So if you do want to see that, join the Patreon, which by the way, currently we do have the Black Friday sale starting today. You'll be able to get this offer until the 1st of December. If you do want to sign up, send me an email, jkinvesting@gmail.com. I'll put it in the comment section as well. If you send me an email, we'll be able to sort that out for you guys. It's not going to be directly done through Patreon because you're not allowed to do sales through Patreon, funny enough. I'll have to do it through PayPal. But what it does, it'll give you direct access to the Discord. And on the Discord, you'll be able to see the exclusive videos on there, which we did. We're going to do over 100 exclusive videos there in 2025, and currently that is £44 for the full year. Normally it would be £72. Works out as like £3 something a month, which isn't too bad at all for the 100 exclusive videos you get on there. The Discord as well to talk to members of the community and also me, and you support the channel as well, guys. So yeah, send me an email if you do want to join. You've got 2 weeks to join that if you do. But what made me laugh as well last week, I didn't really touch on this on a video at some point, but Powell came out and said, oh yeah, we're going to be a little bit more cautious around the rate hikes. I thought, you won't be doing that when Trump's in next year, mate. But getting back onto today's video, we were going to talk about Disney stock because Disney stock actually had a really good rally last week. Not as good as Shopify, but still for Disney to move up 16%, that's a pretty good rally. And the stock for Disney has been like, it's been a bit of a slump for quite a while, really. It had the launch of the Disney, well, we had the kind of CV boom, then we rallied out with the parks and the boom in Disney Plus, and then it just kind of went stagnant. Well, it didn't go stagnant, it fell off a cliff for like the next kind of year or two, and then it's kind of been stagnant really for like the last year and a half. But we've kind of come out of that dip at the moment, and we are starting to rally up a bit on Disney stock. And the reason why is because it had a really good earnings last week. If you look here, the EPS beat by a good amount, well, non-GAAP EPS beat by a good amount, revenue of 6.3% year-over-year growth. But probably the other good things that were in this report was the guidance. The guidance was actually, to give a long-term guidance is something that market do like, and as investors we do like where do you see the company going in the next few years? And they did give a longer term guidance, and as well as that, the guidance was a lot better than was expected. If you look at what 2025 we're expecting EPS growth of high single digit. This compares to the estimate growth of 4.14% year over year, so that's really good. And then also they gave some guidance for 2026, which was double digit EPS growth, and 2027 double digit EPS growth again. So the market really liked this, that it got its confidence of where it's going to go in the next kind of couple of years, and also the fact that it was double digit growth is the market really liked that. Obviously during that time frame, we're going to have a new CEO in this time frame. Hopefully it works out better than the last changeover in the CEO, and Bob Iger doesn't have to come back again. But obviously some of the investments that they've been putting in have kind of shown, hopefully, that they're going to contribute to the growth really good amounts next year, as well, the next kind of couple of years as well. But the standout things in this report as well was the profit is really ramping up. I think what happened with Disney is that you just had so many different types of investors getting in this. You had like value investors, you had dividend investors, growth investors. And I think what was happening is Disney wasn't really targeting an audience of like what investors are owning this stock. I think because they were going for so many different categories, people didn't really understand where Disney was going, and it went from the value, dividend to the growth, and now it's going back to like the value and dividend kind of investors here with the nice amounts of profit growth. And I think that's why the market is starting to like it, because that kind of investor base is coming in now. And I think they're staring at things like the overall growth for the income was up 23%. The entertainment's now generating good amounts of profitability, 1.1 billion in entertainment profitability. They've got the move. One big thing I think what went wrong with Disney is the entertainment and the movie releases just got a little bit stagnant, a little bit poor, and they've kind of sorted that out again. They launched Inside Out 2, and which I've not seen, but a lot of people say is actually really good. And Wolverine and Deadpool, which was really successful, that smashed a lot of records. I've saw that one as well. I thought that was probably one of the best movies I've seen all year for a superhero movie as well. Really good. And that also generated 360 million content sales. Experiences expected to grow 6 to 8%. This is big investments into the parks once again, and also the cruise lines as well. That's one thing that seems to be really expanding on. I think they're going from 6 ships up to 7 ships as well. Disney Plus now profitable as well, so dragging up that profitability through advertising as well. Advertising growing very well, and obviously the content sales. You know, when you are generating the great content that Disney are again, that's going to drag up Disney Plus sales. It's going to have the knock-on effect. And maybe it took Bob Iger to come back and start doing key partnerships like the Epic Games partnership, where they can actually start turning some of these movies into games content. And I personally think now, obviously the stock reacted very positively off it this week. I think the signs have been here for a while that the ship's been turning a little bit on Disney. I remember doing a video on Patreon, which was this one here on August on the last earnings, and I did an earnings review and I talked about a few stocks including Disney. And on that video there, I said, like, this is looking good, guys. This is looking really good that the profitability is coming back, and I think we are starting to see all the rewards of the investment coming back in now, and that's why we're seeing strong numbers, and then we're seeing the strong guidance being given on Disney. And yeah, I think that it's a deserved rallied up. The big difference now is that when I last kind of covered Disney on the main YouTube channel, the last time we covered about Disney was actually when the stock was this one here. It was $82, 150 billion market cap. And when I put the numbers in for Disney last time, you could see here, like, even on the downside, there was upside. That's when I like making investment. If on the really downside, you're still getting upside. But on the mid side and the high side, the numbers I thought they would more likely do, you know, you could see here there was 60 to 100% upside, which obviously on a gem like Disney, when you're getting all that kind of moat and the content there, I thought, yeah, I've always said like under 90 for Disney is a really good price if you can get there. And obviously we were at $82 last time, we covered it on the YouTube channel. So there's not really a big surprise that the stock's kind of rallied. Looking at up-to-date numbers with Disney, like what's the plan with Disney going forward? Is it a buy, sell, hold? Looking at numbers, I've got exactly the same numbers in as what I did last time. The only difference is that I've updated the numbers a little bit because we're a bit further ahead now, you know, doing great amounts of revenue nowadays. So the upside's a little bit more, or the worst numbers is a little bit more negative now. Mid-side, 9% upside. On the high side, 41% upside. So the numbers are not as attractive as where the stock was at $82. Obviously that was a really good buying opportunity. Right now I don't think Disney's that big of attractive value right now looking at these numbers. The only way that they're going to probably do even better than what I am expecting them to do is either to grow more than 7% a year. The other way is metric expansion. I've got 20 times earnings in. If the company goes to trade at like 30, 40 times earnings, that would be the other way that potentially have a lot more upside. And looking at profit margin on the high side, I got 10 to 12%. I am expecting some metric expansion from these guys still, because right now they're sitting around about 5% profit margin. Previously, before the whole coronavirus situation, the company actually used to do a lot higher than this profit margin. They used to do around about 15%. They managed to get that all the way up to 22% before the coronavirus happened. So there is potential that my numbers could be really wrong, because they could potentially grow more than what I'm expecting. There could potentially be a higher profit margin than what I expected, and they could have metric expansion. You know, we've seen so many companies now that, normally a company like Disney trades at 20 times earnings, but maybe you could argue the case that it trades at 20, 25, 30 times earnings. So that would be the more upside than what I potentially expect. So right now with Disney, I think potentially if you're wanting to buy, I think you've kind of missed it here. I think you should have been buying it a little bit longer. From a shareholder point of view, I'm happy to hold here. Yeah, there's not much limited upside here, but for a company like Disney, I think it's a great company to hold in the portfolio. And you know what? If they do surprise me and they do beat these top numbers, I'll be even more happy with that. So for anything right now, in my opinion, yeah, I'm not a buyer. I'm holding my shares. And you know what? Because these are a little bit more limited upside, I probably will take a little bit of profit off the table, but I will hold the majority of my position because I still think there's, some upside here. And like I said, if they can drag that growth up a little bit more than what I'm expecting, if they can drag that profit margin up from the 12% that I've put in here, if they can get close to what they used to do, the 15% profit margin, 16, 19, that'd be a really nice bonus there if they are able to do that. And we'll see what the company, the market values it at. Obviously I put it down at 20 times earnings, but in this market, I mean, what do you value it at? I won't be surprised if the market starts valuing this at 25, 30 times earnings. So we'll see what happens. So I think there's room to be surprised here. But yeah, it's one that I said that was, when the stock was like $82, I was saying like, this is a good opportunity, guys. And obviously now we're at 115, and hopefully some of you guys have the rewards, and obviously some really strong earnings from Disney, and great guidance. If they're able to hit this guidance and also do increase that dividend and also do a little bit more share buyback, you're going to get some rewards as shareholders as well. So yeah, Really, really good numbers from Disney. So well done for you, any of you guys that have been buying that $80 or $90 range. Anyway, have a great Sunday, guys. See you in a bit.